Ladies and gentlemen, good day and welcome to Tiger Logistics India Limited Q2 FY2024 earnings conference call hosted by Rick Capital. We have with us today from the management, Mr. Harpreet Singh Malhotra, Chief Managing Director of Tiger Logistics India Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risk that our business faces that could cause our future results, performance, or achievements to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand the conference over to Mr. Harpreet Singh Malhotra. Thank you, and over to you, sir.
Thank you. Thank you for starting the call. Good afternoon to everybody, and a very hearty welcome on this October afternoon, Friday October afternoon. So, it's always a great pleasure talking to everybody, whoever is, who's joined in and, people who are very keenly following our results and our performances and our company. So as you know that, Q2 results have already been declared and they've already been published and uploaded on the exchange, and also along with that the business presentation has also been uploaded. So I hope that everybody has gone through that, and it will be a good idea to go through the business presentation as well, which also gives an insight into what has been the key development in the last quarter and how we are looking at the coming quarters as well. So overall, I would say that the quarter has been very satisfactory. Looking at the overall global scenario, overall global business, how it is shaping up, where we have a lot of geopolitical situations arising almost each day. But we see that, India is still emerging as a very strong player, as far as the global business scenario is concerned. And people's, I would say, big buyers' faith in India is only increasing day by day. And that is very much evident from whatever if you see the growth numbers at the ports, the cargo volumes and the cargo volume being handled at various ports in India. So that actually emphasizes that yes, the volumes are increasing from India if you compare it with various previous quarters. So that shows that the overall confidence in Indian suppliers is increasing, and the government policy of Make in India and promoting the export is taking shape very well, and which is very good for overall logistics industry as and also for us, because once these volumes go up, then definitely our business also grow along with that. Overall, about Tiger Logistics, the quarter has been a good quarter. We've seen a major increase in our overall business volume. That is the TU handling, which has increased, close to 30%. I would say 29% or so, to be more specific, and in the total TU volumes I would say from quarter to quarter. So that's quite a substantial jump as far as the volumes are concerned, which is a good signal that the company is growing as far as the business is concerned and handling of overall business is concerned. Other than that, there has been a significant growth from previous quarter to this quarter in the top line. Even there is a percentage good growth in the EBITDA margin of from 7% to 8.2%, and also in the PAT overall PAT and PAT margins from 5% to 6% is the PAT percentage growth. So we see that overall, though the business volumes are growing, but ocean freight still remaining at a lower level, even lower than the pre-COVID level. So that is not getting reflected in the top line. As you know that the top line is, we are in the cost plus model. So our top line, the turnover is the billing which we are doing to the customer, and since the overall freights are at the lowest levels, the top line number is not showing growth overall, but from quarter to quarter, yes, it is showing growth because the reason is that our volumes are increasing. Which is quite a encouraging sign for us, and I hope that we continue to keep up this growth volume as well as reflecting converting that into business in the figures as well. Some good developments which have happened is that we've been able to strengthen our position in the project side of for the Government of India. Like we are doing now good work for Government of India as of now. We've bagged some new tenders in this quarter. Which this is a new growing sector for us, and I think it will continue to grow. Other than that, the Freight Jar, the digital platform, is gaining good momentum, and recognition in the market. And overall, there has been a good acceptance of the Freight Jar digital platform. And whatever last 6 months we've spent on this, I think there has been a lot of learning for us. Whatever are the more new changes are needed in the software, we are making them, and we are moving as per our customers' requirement, and we are moving with time. Whatever changes are requirement, we are not waiting for a longer period to make those changes, but we are aligning as far as the requirement of our customers are concerned, and making required suitable changes in the software so that the customer satisfaction is achieved. We are able to achieve good numbers. So overall, I would say that Freight Jar has been doing a good business. I think we've reached close to 1 crore of Indian rupees of business there. To be very specific, around 90 lakhs is that business. And we are seeing some new sign-ups, close to 120 new sign-ups have happened in the Freight Jar. So which is a good development, and I think overall cumulative figure is around 138 lakhs in freight in the digital platform. So I think that the numbers are increasing day by day, and we are also seeing that through the digital platform we are able to access newer customers, we are able to access new businesses, which is a good development. Another good development has been that now Freight Jar is integrated with the ICICI Trade Merge platform. Now this is a strategic collaboration which will definitely open new doors for us, and also give us access to new customers, new clients. And we see that, it will add a lot of credibility.
Sir, sorry to interrupt you.
Yeah.
You're losing your audio slightly.
Hello? Yeah, can you hear me?
Yes, sir. Yes, sir.
Yeah. So I said that this ICICI Trade Merge strategic agreement will definitely help us, in getting new customers, in of course, adding a lot of value in terms of reliability, to the whole brand and to the whole platform and to the company as well. So this will open doors for us to new customers. Other than that, I think getting government projects itself is adding, a lot of reliability to our company, and especially securing contracts from big prestigious organizations like BHEL and BEML and HAL adds to our credibility as well. So overall, I'm very happy, that business is shaping up well. Though there are some challenges in terms of, supply chain, global supply chain issues, especially in terms of, the new development in the Gulf area. But we are not seeing any disruption as of now, and we don't see anything, which is affecting our business as such. So we are very bullish about, about our business in the coming quarters. We are also looking at, we are open, still open to inorganic growth through acquisitions and mergers, where we are scouting for companies, and we are hopeful that we should be able to share some good news in coming quarters. So overall business is shaping well, and I am very hopeful that with our new focus on developing new businesses, new trade lanes, business will only get better each quarter. So with that, I would like to thank everybody who's been has trusted in us, who have trusted in us, and who've got who've got faith in the organization, and also at the same time have always supported us. So I would like to end this small brief download on what's happening on the business, and I'm ready to take any questions or anything which anybody has any queries on the company. So thank you so much for joining in, and I look forward to again discussing, answering any questions if anybody has. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Good evening, sir. I just want to understand what is exactly revenue model for freight jar, because for existing customers, probably we might be giving all the information what is required for them when they do business with us. So for freight jar, how does it differentiate and what is the exact revenue model for us? If you can explain, I think that would be helpful.
Yeah. So basically, you're Vikram, yeah, correct?
Yes, sir. Yeah.
Yeah. So Vikram, basically, Freight Jar is a digital platform. It's a digital platform. Basically, it is a online price discovery platform for all our customers, especially for the SMEs and MSME businesses. So today, if you're sitting somewhere in a meeting, or you don't have access to good rates, or you're sitting somewhere in Saharanpur or maybe somewhere in Meerut or somewhere, but you have exports happening and you want to know what are the freight levels, current live freight levels, real-time freight levels. You can actually go on the platform, see the freight levels, and actually book the shipment as well. So the business model remains the same. We put the actual our selling on the digital platform, so you can actually book the shipments on those freight rates. So the whole idea is that to create that atmosphere of transparency, environment of transparency, where you don't have to mail it to us, take the rates, and then approve the rates, book the shipments, which takes around 3 to 4 days. But here you can actually book the shipment in 3 to 4 hours. So today, suppose you have a shipment going to Hamburg, you can see the freight of a 20-feet container for Hamburg, approve it online, and book the shipment online and make the freight payments online and get your documents also online. So it's a fully integrated online digital platform where you don't have to call us or do any such thing. So the revenue model remains the same. The way we book a shipment offline. Suppose if I have a sales manager who goes and books the shipment, the customer calls us, and we do the whole transaction offline. It is same happening online, so nothing changes. So on the platform, we are only putting the selling of the rate, which includes our profit margins. So that is how it moves. So it is basic idea is to create that transparent environment to reach out to maximum number of customers, which may not be humanly possible if for my sales team to reach out, and also to create a competitive environment for SMEs and MSMEs. So that's the whole idea.
Okay. And is there any regular subscription price for using this app?
No. There is no subscription. It is a digital platform. It's a sales vertical for us, if you can say it like that. So instead of we are promoting it as a sales vertical, we are not promoting it as a subscription model or anything. So you can just access it without any subscription model. So because since we are we are not a startup, we are not where we do our earning is not from subscription, but our earning is from our hardcore handling of the complete logistics. So that's what we are focusing on. So there is no subscription model. These are actual shipments, and you can book the actual shipments like you do it offline.
Understood. Thank you very much.
Yeah, thanks.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Tanuj Mehta from JM Financial. Please go ahead.
Hello, sir. Good evening.
Hi.
So my question is that how the world tension related to war in the Gulf region is affecting our supply chain and its effect on the availability on container.
Yeah. So, Mr. Mehta, as of now, there has not been any major effect on the supply chain as such because, the war is happening in one side of the Gulf region where, as it was not a very great, volume creator for India. But we are just hoping that the war does not get escalated and don't want other Gulf nations to get involved in the war. But as of now, there has been no effect and there has been no, supply chain disruption as such. So we are at this point of time. At this time, we are not facing any challenges as such. But surely, when these things happen, there are some apprehensions in people's mind and all, which may be temporary, and that's what we could face. But as of now, on ground, there is nothing to suggest that there are any disruptions in the supply chain.
Okay. And also, do you see the container rate increasing in the coming quarter?
Yeah, we see that happening. Maybe by December or so, we see that that improvement because that downfall has stopped surely. So now we are seeing that the supply, the business volumes are increasing globally, and lines are facing some challenges in terms of space and all. So we can. There are, we can see those signs that lines are not keen to reduce the rates further, and in some sectors the rates are going up as well.
Okay.
Yeah.
I want to talk about our digital platform, FY2023-24. I think it's gaining good traction. how is the management planning to penetrate deep into the India tier 30 cities to increase the performance?
Yeah. So honestly, we are going. Though we are very bullish about the digital platform and their acceptance in the industry and overall performance, but we are still wanting to go slow as far as any major investments are concerned. We are focusing on strengthening the software. So that's the reason I said that we are making whatever learning we had in last 4-5 months, of our soft launch. We are making those changes again in the software to make it more compatible with the requirements of the trade. So once these things happen, then maybe we'll go, and also we are hiring more people, who will be able to explain these, the software to the industry at large. Surely the digital acceptance is low. And especially in our industries, it's much lower because people still want to, sit across the table and finalize the rates and all. So they still haven't got into that thing that, okay, we go online and book the shipment. But overall, people are willing to hear. So when they are willing to hear, I think the first battle is already over. That they are willing to hear, and when they see the platform, they are very happy about it. So I think in quarters to come, you will see some major road shows happening from our side for this platform.
Yes, definitely. And sir, my last question would be that how are we planning to increase our revenue from domestic front?
Domestic, nothing is going to happen. We are not into domestic sector, and we don't. There is no. There is no. Planning to get into domestic sector because we feel that there's lots to be achieved on the international front, and at least for next 5 years, we don't see the company getting into the domestic sector because it is already, very cluttered and it's very unorganized. So we don't want to go into any capex at this point of time. So we are in a good space and we want to develop that for next 5 years.
Okay. Thank you. Thank you so much, sir.
Thank you. Participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who wishes to ask a question may press star and 1. Next follow-up question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Sir, if you look at our revenue mix, we used to do quite a good amount of revenue from commodities, basically, as well as project cargo. But large part of our current revenue is from auto-related. So is there any reason the change in the mix or how is the opportunity going back to the, say, commodities or project cargo?
So traditionally, yes, but we have always been very strong in the auto sector, and that is the reason that in last 2 years, we were able to ride the growth wave of auto sector, and and the commodities were not doing very well. So, commodity auto is one business which is consistent throughout the year. There is a lot of visibility in that sector. Though the volumes may be consistent, but at least consistently they are growing. But in the commodities, these either they are very seasonal or they get affected by, by various government policies and all. So, if you look at last 2 months, rice exports have been stopped because of various government regulations. So it is just that last night we issued the notification for allowing the export of basmati rice at a negotiated at a lower rate of exports. So we are, of course, we are participating in the commodity sector, but we will be doing it on and off. Like we don't have any big plans to go full-fledged on that. But on the auto sector, It's a growing sector for us, and we'll continue to do that. And in the projects, we are doing very well, and those volumes are increasing also. So this is going. But in times to come also, the major contributor would be auto and auto parts and auto accessories and all. And I think because that is working well for us, and we will continue to, it'll always be a major contributor for us. But also we are at the same time, we are increasing our footprints in the other sectors like electronics and all. Like recently we've been able to penetrate into imports of electronics goods and other similar items. So those footprints are increasing.
Sorry. And would the profit margins would be significantly different compared to when you do the business with auto or enter into the new field like say electronics or commodities?
Yeah. See, please understand that commodity is a volume business. The profit margins are the lowest in that. That is just fillers. So if I have to, those are just fillers, like, okay, if I have some kind of obligation towards some volume commitment, then it is the right business. And the low margin is the lowest there. But, if we can't make good money in commodities as such because it's volume business. But in auto sector and other commodities, it is the best business to do because it is the lightest business. Every shipping line wants to do that business, so you will always have better purchasing power. In the commodities, it is a heavy cargo, so you will always at the lowest rung of the rates. There is the last preferred cargo. Though it may be volume, but it is the last preferred cargo. And the payment issues and all those things are also the maximum because you're dealing with the owners directly and, somebody going here and there and your payments get stuck. But in auto sectors, you are only dealing with the professionals and big corporates and multinationals. So your payment cycles are also assured and your receivable cycles are also, they get better. So that's the whole profile.
And within containers, what we handle, is it like a mostly, do we get a breakup for how much would be import and export or a broad mix of import-export?
Majorly export, I would say 85% is exports.
Okay. And
but our volumes are improving in imports as well.
Okay, got it. And in commodities, we do only container, not the bulk movement.
Not the bulk, correct. Not shiploads, only big bulk. Only containerized.
Got it, okay. Thank you.
Thank you very much. On behalf of Tiger Logistics India Limited, I conclude this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, everybody. Thank you.